Hola, bienvenidos, ¿cómo están? Estamos en sintonía con Negocios TV en una nueva entrega de lo que llamamos Global Macro Américas, donde estamos hoy hablando con el fundador de MI2 Partners y el fundador de Balfour Capital Group. En el caso de MI2 Partners es Julian, quien es un excelente Global Macro Analyst, quien tiene mucha experiencia con clientes institucionales. Y en el caso de Steve, Torce, how are you? Nice to see you in our Tribune Global Macro Americas. And I would like you to tell us a little bit, what do you think about the markets today, seeing a little bit of volatility within the last couple of days, and what do you see for the rest of February, please?
Well, first of all, Victor, like always, a pleasure to be on your show. I'll tell you and a happy Valentine's Day. I'm going to tell you what I think of the markets at these levels. Without question, you are going to see an unprecedented amount of volatility. And this type of volatility is going to be the new normal for at least the next 90 to 120 days, categorically and definitively. Now, going into a holiday, because the markets will be closed on Monday, most of them will, this is a big weekend, just in general, for the mindset of the market and the psychology of the market. That's what I see right now. I see in the short term, it's very possible that the NASDAQ and the Dow could come off 2-3% in a heartbeat. But it could be the new normal now with extreme ranges in volatility. And you're seeing that in the commodity markets, obviously in gold, which I'm very bullish. See gold going to 3,300. And crude is going to be a major factor here, WTI crude, and the spread between WTI and Brent. So that's what I see.
Excellent. Julian, I know you've been speaking with a lot of portfolio managers and hedge fund managers, let's say, in the US, in Europe. And I recently was seeing a piece that MI2 Partner released to the institutional audience where you're seeing a correlation with nominal GDP and interest rates. And you were talking about productivity. I think I want you to explain from your point of view what's going on for the trader, for the portfolio manager, but also for the regular investor that is a little bit having some sort of anxiety with all the tariff and the geopolitical movement in the world.
Yeah, we wrote this piece for our clients the other day, and we were looking at using actually a model that we've been working on for a while, what the economies are telling you the effective interest rate is. And or the Fed funds, so where the Fed is set policy. And the effective policy rate is, according to our work, given the strength of the economy, under 2%. So we believe that when we look, and we forecast this week that we were going to see much higher CPI and PPI data, that we are really in risk of a policy error at this point from the Fed. And we've been saying to our clients that the idea that inflation is defeated is an utter joke, a complete and utter joke. And so I think, when I look at, say, the bond market, I think clearly this is a lot of what is going on in the markets right here, right now is positioning. Whether you look at, within the equity market, whether you look on the dollar, whether you look at interest rates, a lot of positioning hangovers from the start of the year, those are all getting shaken out. And I think some of this move lower in yields and 10-year treasuries is indeed that. We would be looking to fade that move at some point and to basically bet on yields rising yet again in the US. The big issue that is really vexing markets is this rotation that we've had out of relatively out of US stocks and into particularly European stocks. And there is a narrative being created where there are lots of moving parts to this narrative, but basically that this could be the beginning of the end of what we refer to as US exceptionalism, right? Or the market refers to as US exceptionalism. And I think that's probably the most interesting thing, because if that's the case, literally everyone, the things that you have bought since the lows of 2011 and particularly since 2014 when the dollar started to rise, you need to sell all of those. And you need to go and buy the stuff that you haven't owned, which is basically mining and metal stocks, material, energy, all of those things. You need to sell your tech, you need to sell your discretionary, you need to sell, your healthcare. And this is the biggest growth. It's essentially a big growth value rotation. And the US is a huge growth market. So you sell the US and you buy the rest of the world. And that's what markets are trying to get to grips with. You can see it in the currency markets. You can see it to some degree in the bond markets. You're certainly beginning to see it in the equity market. Now, Is it real? We will see, but there are certainly some things I think potentially coming down the pipeline in DC that could mean it is real.
I see. Listen, I know you both remember this series, HBO series called Billions. So I'm going to ask you how certain you are in your opinion about the markets. Going with you, Julian. Are you completely convinced about what you just mentioned?
I did a client presentation, or what we call an Ask Me Anything, so sort of an open mic sort of forum, basically, that I did the other day.
Huh?
And I got asked my favorite equity trade. My favorite equity trade was long, heavy energy using German stocks. So BASF, Bayer, there's a few ThyssenKrupp, like the steel manufacturers, those types of names. Short, the hyperscalers in the US, unhedged. So I want to basically take the euro currency risk as well.
Excellent. Steve, I want your opinion about the commodities, because commodities are, basically extremely volatile. You see the oil going up, then because I don't know if you guys know the news, Iran was threatening that they can close I think in English is the Hormuz Stretch, I don't remember, but in Español es el Estrecho de Hormuz, which is where all the oil is going. And then when President Trump was announcing this kind of sensational agreement with Russia potentially, the oil collapsed. And then today we're seeing the oil again coming up. And I know you and I were talking about specifically the oil and the growth, and I would like your opinion specifically on that and any other of the commodities that you are seeing interesting for the midterm in this 2025 market volatility, please.
Well, as far as commodity, let me tell you what I've seen. Copper's had a run in